Welcome to the Travelex Outlook for the week of June 28th. The U.S. dollar starts the week off mixed. Dollar is posting gains against the euro, though we did see the dollar weaken against the Japanese currency. In fact, the dollar did hit a 5-week low against the yen. Overall, right now, we're seeing a continuation of some of the themes that we saw last week, and that's on an overall depressed level of risk appetite, and that is boosting some of the traditional safe haven currencies such as the dollar and the Japanese yen. And that is on concerns about the strength of the global economy. Also this week coming up, we do have a full slate of U.S. data, and so that is also contributing to some of the more cautious tone that we're seeing in the market. Going back to last week, we did see the dollar turn in another mixed performance. Dollar was up against the euro, though it did fall to multi-week lows against both the Japanese currency and the British pounds. And that was on renewed jitters about the pace of the global recovery. And that was really highlighted by the week's main events, and that was the Fed meeting. The Fed, at that time last week, we did see that the U.S. Central Bank left interest rates unchanged as expected, but in its accompanying message, it did strike a more subdued tone on the outlook for the global, the outlook for the U.S. recovery. So as a result, we did see the dollar somewhat lose some of its upward momentum that we had seen, and that was also because the Fed restated its intention to keep U.S. interest rates low for another prolonged period of time, and that's a period that many investors believe will be about 6 months. Like I said, that did weigh on the dollar's yield potential, though it did post some gains against the Canadian currency, given that the market's more risk-averse backdrop. Also last week, we did see the British pound really soar across the board. That was one of the week's top performers, and that was on optimism about the UK's budget that they unveiled last week. Many investors believe that that was going to be forceful enough to not only tackle the nation's gaping trade deficit, but also strong enough to really ward off any type of sovereign debt downgrades. As a result, we did see the pound rise to its best level in 6 weeks against the dollar, while against the euro, the pound rose to its highest level in a year and a half. The week ahead will be one that has a lot of U.S. data, and that'll really shed light on the pace of the U.S. recovery. The main event for the week should be on Friday, and that's when we get the U.S. non-farms payrolls reports. That is expected to show the first reduction in U.S. employment since February. That could also add to the Fed's more cautious tone on the outlook for the economy and perhaps sap some of the dollar's safe haven appeal in terms of the outlook for higher U.S. interest rates. Also this week, we're expecting data on U.S. home prices as reported by the Case-Shiller Home Price Index, consumer confidence, and manufacturing data. All of those reports should really answer some of the investors' unanswered questions as to the pace of the U.S. recovery. That is it. One more thing, we do have market liquidity that's likely to dry up before the end of the week, and that's when we go into the U.S. holiday weekend for the 4th of July. But that is it for right now. Please check us out online for breaking foreign exchange news.